Ladies and gentlemen, Greg McCloskey from ForexLive.com. In this video, I'm going to take a look at the sterling versus US dollars. We head into the new trading week starting March 11, 2024. What levels in play? What's the new bias? What's the risk levels? Things like that. So let's get started. All right, so buyers turn in this currency pair. For a longest time, I've outlined this box right here. This box had whereas most of the price action took place over this time period going all the way back to December. Again, this is a 4-hour chart, and about 3 or 4 weeks ago, the price started to trade more below the lower end of this trading range. We spent a number of 4-hour bars below that level. So the sellers definitely had a shot in taking the price to the downside on a number of different occasions, but they failed. And in trading over the last few weeks, we've seen more buying interest at the lower end of the extreme right through here, including in trading at the end of last week where the price bottomed right down here and then started to move higher. We closed last week above the 100 and 200 bar moving averages on a 4-hour chart. That's a blue and green line right here. And in trading on Monday, as you can see, we moved higher, tested the high price that we saw not last week but the week before right through here, and then came back, and this was a key level right through here, the 50% retracement level of the move down from the most recent high right here to the most recent low. The ability to hold that level right here was the defining level for the buyers to take more control, and indeed they did get rid of all that stuff. You can see it right here, how the price based against that level and started to move to the upside, and that move to the upside was pretty much unabated. Yes, there was some retracements in between here and here, but the last day or day and a half, the price has seen upside, pretty strong upside momentum. That move to the upside was able to get above the previous high prices, including the high of that swing area near the 128 level, that box right through here. And we also moved above the swing high right here, which was quickly reversed, and the price started to move higher at the 128.27. So that is that break to the upside is significant. And what we also saw, which is also significant, is that once the price broke above the high of this swing area, we came down, retested that level, and moved higher. So that is to a key tell for the market. The buyers were making a play. They wanted to keep the bias going to the upside, and they took the price higher as a result. So as we head into the new trading week, there are obviously levels in our rearview mirror that are important for the bias to remain more bullish into that new week. One is the old high at 128.27, and two is this upper swing area between 127.88 and 128. As long as the price can remain above those levels, so the ship is more still floating to the upside, if that makes any sense. But the bias will remain to the upside for the sterling versus US dollar. So keep that in mind. Down to 127.88, but close support at 128.27 for the sterling versus US dollar. Now let's take a look at the daily chart. And when we look at the daily chart, not only did the this swing area right here has support at 128 up to 128.47. And it goes back longer than that 4-hour chart on the previous charts that we were looking at. This goes back to these levels back here in June of 2022, or 23, I should say. And there's a number of different times that the price came up to that level, either as a support or resistance before breaking to the downside right through here. And then we returned to that level again right here in the month of December, not to return to it again until, well, the last day where the price broke above that level. So again, it reinforces the 128 level. Closer, the 128.47.8 is going to be another level. If we're able to stay above those levels, then we start to look toward this swing high at 129.95, and there's really nothing much else until 130.140. So there's ups and downs through here, but from a technical perspective, it's really 129.95 and then 131.41 as topside targets for the sterling versus US dollar going forward. So those are our technical levels that we're going to be paying attention to. Most of it on the downside resolves around the 128 level for this currency pair, down to maybe 127.88. As long as the price remains above those levels, the bias remains more to the upside for the sterling versus US dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.